Today, I'm going to go over the 3 job functions at an investment bank that also happen to pay the most: investment banking, sales and trading, and equity research. Let's cut out all the fancy words. I'm going to explain in plain and simple terms what each group actually does, the hours and lifestyle of each, how much money you can make, and what exit opportunities or new roles you can pursue if you decide to leave these jobs. I've been an investment bank trader for the last 5 years, and I wish I had someone explain these things to me when I was just starting out. I have a lot that I want to share with you, so let's get into it. Okay, first, what even is an investment bank and how is it different from normal banks? I'll explain in 30 seconds. Investment banks help companies and governments raise money and with other financial transactions such as mergers and acquisitions, whereas commercial banks provide everyday banking services to people like you and me, so things like checking accounts, saving accounts, and giving out loans. Investment banks are split into 3 parts: the front office, middle office, and back office. Today, we're going to focus on the front office, which is where they generate the revenue with clients. And it has 3 main divisions: investment banking, sales and trading, and equity research. All right, now let's jump right into what each group actually does, starting with investment banking. So you're the deal makers of the finance world, and you'll help companies with 2 things. The first is mergers and acquisitions. A merger is when 2 companies form to combine into one larger company. For example, when Kraft and Heinz merged in 2015 to form the world's 5th largest food and beverage company, which gave us the Kraft Heinz Company. And an acquisition is when one larger company acquires another company. So when Facebook acquired Instagram in 2012, or when Facebook also acquired WhatsApp in 2014, where Facebook's strategy was to expand their user base and strengthen their position in the social media market. And the second thing investment bankers do is helping companies and governments raise money by either selling stocks or bonds. So if you've ever heard of IPOs or initial public offerings, that's when a private company sells shares on the public market for the very first time. Some recent well-known IPOs include Reddit from March of this year, as well as Airbnb and DoorDash from 2020. So the investment bank connects the company who needs money and investors who have money and are looking to invest it, and they connect them with each other. As an investment banking analyst, the main tasks you will do are financial modeling in Excel, where you'll be building models to predict things like a company's future financial performance and its value. You'll also be analyzing financial statements of companies, conducting industry research, and this next thing, which will take up a good chunk of your time, which is building presentations in PowerPoint. We call these presentations pitch books, and these are sales presentations for clients that are used to discuss taking actions on specific deals. And as you move into more senior positions, such as a director or MD, you'll rarely work on these documents or pitch books anymore. Instead, you'll spend most of your time in meetings, and these could be with existing or potential clients, companies, or private equity and venture capital firms. Moving on to sales and trading, in simple terms, you buy and sell financial securities like stocks and bonds. And the trading floor is split up by asset classes. So there will be a specific desk for equities, a fixed income desk, a foreign exchange desk, and so forth. On each desk, there's a separate sales and trading team. In the context of sales, you're the main ones building relationships with these institutional clients, such as hedge funds and asset managers. So you'll be talking to them every day and giving them information on insights on products that you trade, while also trying to understand their needs so that you can pitch them the most appropriate trade ideas. On the trading team, you will do the actual buying and selling in the markets. So your main focus is to watch the markets closely so that you can price the trades that the salespeople bring to you. So in essence, the sales team is the bridge between the investment bank and its clients, and the trading team is responsible for executing the final movements in the markets. And then we have equity research. And as the name suggests, you'll be researching and analyzing public companies and making recommendations on whether to buy, sell, or hold the stocks. And this essentially makes you an expert in specific industry sectors, which could be healthcare, technology, energy, the list goes on. The responsibilities of junior analyst roles will focus mainly on conducting industry research by analyzing trends and diving into a company's financials, financial modeling, and performing company valuations on Excel. You'll be writing reports that are distributed to institutional investors, and these reports could be on specific stocks that you're covering, industry reports, quarterly reports from company earnings releases, and flash reports, which are short ones that cover a news release from a company. And as you move into more senior positions, most of your time will be spent on building relationships with management teams of the companies that you cover, as well as with your institutional clients, where you'll be sharing your views on different sectors and companies. And this relationship aspect of the role is crucial because it builds up trust and transparency. Now let's dive into the hours and the lifestyle of each, starting with investment banking. So you might have heard about the crazy working hours, and it's true. They are notorious for the demanding lifestyle. As a junior analyst, you could be working anywhere from 70 to 100 hours per week. It all comes down to whether or not you're working on a live deal, which means a transaction that's currently in progress and is being worked on directly by your team, where all the planning, negotiations, and paperwork are happening right now. During these times, you could be working from 9 a.m. to well past midnight almost every single day, and likely on weekends too. Because the work comes really unexpectedly, usually later in the day, and it has really quick turnaround times. However, if you're not a part of a live deal, you could be working from 9 in the morning and can wrap up between 8 to 10 p.m. at night. But regardless, it can be hard to plan your time outside of work because you're technically always on call in case something needs to get done right away. So I used to live with a roommate who worked in investment banking, and we literally never saw each other because I left for work at 6 in the morning and she wouldn't get home until 11 p.m. or later at night. However, as you advance up in your role, your hours will get better. So someone in a director level or above could be working 60 hours or less per week. In sales and trading, your hours are a bit better. You're looking at around 60 hours per week, and you're not expected to work weekends because you're on market hours, which means you could actually have a life outside of work. But don't get too excited. That's not including any client events, which usually go pretty late. So usually for at least one night per week, you could be out from 6 in the morning until 9 p.m. or even after midnight sometimes. I have a whole video dedicated to the pros and cons of that lifestyle, so I'll link it in the description if you want to check it out. But in a gist, you'll have really early mornings, but you'll have a lot more control over your personal time, so you'll still be able to make plans with your friends outside of work. And lastly, in equity research, generally it's around 50 to 60 hours per week. However, during certain periods of the year, like companies' earnings seasons, it can be really stressful, and you could be working 80 hours or more, which is very similar to investment banking. It really depends on your firm, your team, and how many companies you cover, because the more companies equals more earnings results and news releases, which means more tasks on your plate. So the workload can be pretty intense, and it requires a lot of reading, writing, and number crunching. However, you do have more predictability over your schedule where you can plan around those busy periods of the year. Plus, you'll usually have your weekends open too. So you'll have a more balanced lifestyle than investment banking, and you'll have less client events than sales and trading. All right, now let's talk money. For all of these roles, I'll be using total compensation ranges. So that includes a salary and the bonus, because the bonus will account for most of your take-home pay, especially as you move up in your role. And it can vary a lot depending on your firm, your team, and your individual performance. So here are the ballpark figures that you can use as a starting point to get a rough idea. As an analyst in investment banking, you'll make around $120,000 to $200,000 per year, $200,000 to $400,000 as an associate, $400,000 to $700,000 as a vice president, and once you're director, managing director, or above, you'll be making around $700,000 to well over $1 million per year. In sales and trading, the numbers can vary a lot depending on what trading desk you work on, but generally speaking, an analyst will make around $120,000 to $150,000 a year. An associate is $150,000 to $300,000. A vice president will make $250,000 to $500,000. A director will make over $500,000. And lastly, a managing director or above will make around $700,000 to over $1 million. And in equity research, the total pay for an entry-level analyst is around $100,000 to $150,000, $150,000 to $200,000 as an associate, $200,000 to $300,000 as a vice president, $300,000 to $600,000 as a director, and lastly, as a managing director, you could be making $600,000 to over $1 million per year. So as you can see, in all three job groups, you can make six figures at an entry level. And finally, let's look at what exit opportunities you'll typically see in each field. So out of the three options, investment banking does have the best stepping stone to the widest range of exit opportunities, both within the finance industry and beyond. The most common are private equity, venture capital firms, and hedge funds, as well as corporate finance and strategy roles for companies across all different industries. This is because you learn a wide range of skills and experiences on the job, which includes financial modeling, deal execution, and industry analysis, which can be easily transferable to these other roles. In sales and trading, the typical exit opportunities are a bit less because the skills and experiences you gain are more specialized in the markets and to the specific product that you're trading. So traders will usually switch to other trading roles at asset management firms or hedge funds. And a common exit for the salespeople is going to investor relations teams at buy-side firms. And something that's seen more and more over the years is people moving into sales strategy and business development roles at non-finance firms. So these could be fintech companies or startups. So the point is, you're not pigeonholed to only public market roles if you do decide to switch out of it down the road. And lastly, in equity research, it's common to move into buy-side research roles at asset management firms and hedge funds, since you can leverage your direct experience in analyzing securities and making investment recommendations. The biggest difference, though, compared to investment banking is that it's harder to break into industries like private equity because you don't have experience working on transactions such as mergers or acquisitions. However, other common exits include corporate finance roles at the same companies that you've covered. And I've also seen people switch to become traders in the products and the industry sectors that they know really well. And clients love seeing this too because they know that they'll get to work with experts who know the industry well and can share valuable insights with them. And finally, I gotta mention that within all three of these investment bank roles, there are many people who exit to a different career path entirely. Whether it's switching to a new industry that's not finance or pursuing entrepreneurship and starting their own businesses. Just because you started in one career doesn't mean you have to stick with it forever. The skills and experiences you get can open up endless opportunities, which is why I think that all three of these roles are great career paths. And on that note, we've made it to the end. I hope you found this helpful, and if you like this video, then you'll also like my last one, where I share all the details on how to actually become a trader. As always, thank you so much for watching, and I'll see you there.